Hey everybody, today we'll be going through two new SPACs that Chamath and Social Capital announced last week. Check it out, let's make some money. If you aren't subscribed to my page, make sure to hit that subscribe button, crush the like button for the YouTube algorithm, and finally, in the description below is the link to my Patreon. Make sure to sign up. You'll get instant posts on my watch list, my portfolios, daily readings, and my buys and sells each and every day as they're happening. The two SPACs that Chamath and Social Capital invested in are RAAC and RMGB through a private placement in public equity, which is a way for them to be able to invest in a potential public company, in this case a SPAC. So Chamath invested in both RMGB, which is reverse merging with Renew Power, a renewable energy company out of India, and then RAAC, which is reverse merging with Berkshire Grey, a robotics company. Both of these investments I am bullish on. I believe that they will do really well. Berkshire Grey is looking to revolutionize warehouses across the country in order to compete with Amazon. Amazon has considerable amount of robotics in each of their warehouses, and Berkshire Grey is looking to help Target, Walmart, and some of the other warehouses be able to acquire the same technology and be able to use AI and robotics to automate many of their processes. And then with regards to Renew Power, we already talked about RMGB. They have great management, and Chamath investing in it through the pipe is an affirmation of the RMGB's management and their skill to acquire quality targets. So in the case of Renew Power, renewable energy in India will be huge. Such a huge population, along with China, being able to make renewable energy work in India will be huge, and Renew Power will be at the center of it, as it is the largest renewable energy company in the country. Wanted to go over each of the ticker symbols that we talked about, RAAC and RMGB. RAAC, we're just looking at the 5-day. We can see that it's significantly popped from earlier this week once the merger was announced, and then it tailed off, just like many of the stocks, as the uncertainty grew within the week and the stock market in general was lower. Next, with regards to RMGB, it stayed pretty consistent overall. Again, people are reluctant to invest because of the negative sentiment about the stock market and uncertainty around the stock market. But as we mentioned in the previous video this week, that the downside risk with these stocks is very low. Each of them is trading near $10, which is the lowest it can go. This is the amount, that's the amount that Chamath and Social Capital invested in. So our downside will be very limited, especially in the case of RMGB, which is trading at 10.99. Again, this is the downside risk up until the merger. Once the merger happens, then it could go to zero or it could go to the moon. Just going in a little bit further detail as far as RMGB, as we mentioned, they're reverse merging with Renew Power, which is a Goldman Sachs backed company. It's the largest utility scale pure play energy company in India currently. That's as Chamath described it in his one pager. And Chamath expects 300 billion to be invested in renewable energy over the next 10 years in India, a considerable amount of money to be invested. And this is due to the large population of India. To be able to get them to renewable energy will be huge. To be able to sustain the consumption that the people in India have, as well as people all around the world, making sure that they move towards renewable energy will be big. This being the biggest company there, this is a huge play by Chamath to be able to work towards climate change and be able to create more sustainable solutions. RAAC is the next one. It's reverse merging with Berkshire Grey, which is a robotics and artificial company. They're offering robots to retailers that can be used to handle various work tasks that might be monotonous. Includes the ability to sort and pick out items in warehouses and logistics fulfillment centers. The argument is that this allows e-commerce companies to be able to continue to offer low prices because they're reducing their cost of labor in their warehouses, because these robots will do a lot of things that other individuals were doing previously. And additionally, this allows a lot of e-commerce as well as big box retailers to compete with companies like Amazon, who have dominated the space currently, and they have a lot of robots working in their warehouses. This gives the Targets and the Walmarts, etc., the same tools and the same robots to be able to use in their warehouses to keep their low prices and to be able to compete and gain back market share from Amazon. Those are two companies that I've invested in over the past week. I will continue to put more money into those investments as I see how their performance have done. I expect them to decrease because the market in general is decreasing over the past few days. So I'll continue continue to invest dollar cost average into those stocks. I would recommend you do your own due diligence on these two stocks. The risks are low, but the rewards are potentially significant. So make sure to check them out. Let me know your thoughts. As always, make money, enjoy life. Peace.